Hello and welcome all to today's edition of the Daily Market Rundown, where we break down the top financial headlines shaping the Indian economy and the corporate world. So in today's session, we'll explore the US-China trade deal, President Trump's big move to cut drug prices, the Indian stock market's sharp rally amid easing tension, and Tata Steel's blockbuster quarterly earnings. So let's dive into the details one by one. So first up, we have in a major de-escalation of trade tensions, the United States and China have agreed to a 90-day suspension of tariffs starting May 12, 2025. Under the deal, the US will reduce tariffs on Chinese goods from a steep 145% to 30%, while China will slash its tariffs on American imports from 125% to 10%. Well, the goal here is to relieve pressure on industries battered by the long-standing trade war, offering breathing space for both the economies. President Donald Trump hailed this as a win for American businesses, and Apple CEO Tim Cook pledged up to $500 billion in US manufacturing expansion, an investment likely to create thousands of jobs and spur infrastructure development. On the other hand, global markets rejoiced upon this news. The Dow surged nearly 1,000 points, the S&P 500 gained 2.6%, and the Hang Seng Index jumped over 3%. Next up, we have in a dramatic policy move on May 12, 2025, President Trump signed the Delivering Most Favored Nation Prescription Drug Pricing to American Patients executive order, aimed at curbing skyrocketing drug prices in the US. Well, the order mandates that the pharmaceutical companies match or beat drug prices available in other developed nations within 30 days. Failure to comply may invite government action, including tariffs, export restrictions, or allowing the US to import cheaper drugs from abroad. This order also directs the FTC to break down on anti-competitive behavior in the pharma space. Another big change is the elimination of the pharmacy benefit managers, that is the PBMs, intermediaries who negotiate prices but often obscure actual costs. This move aims to facilitate transparent carriage sales at internationally aligned MFN prices. Markets didn't take this lightly. Shares of US pharma majors like Pfizer, Merck, and Eli Lilly fell between 2.1% and 3.6% in pre-market trading. European drug makers like AstraZeneca and Roche also slumped up to 6.8%. Analysts expect legal hurdles with prior attempts to implement similar reforms blocked in court. Next, we'll be talking about the Indian markets. It rallied sharply on the back of the India-Pakistan ceasefire announcement and the US-China trade deal. The Nifty 50 rose by 917 points, approximately 3.82% yesterday, to close at 24,924.7, while the BSE Sensex jumped 2,975 points, approximately 3.74%, to end at 82,429.9. This rally added a staggering 16.15 lakh crore in investor wealth, lifting the total market capitalization of BSE listed companies to 4.32 crore, or approximately $5.05 trillion. Well, the key drivers that you may ask: first, the surprise ceasefire agreement between India and Pakistan eased border tensions, claiming geopolitical nerves. Second, the US-China tariff truce sparked optimism about global trade recovery. Lastly, the Indian Meteorological Department forecast of an early monsoon boosted expectations of a good agricultural season and strong rural demand. Sector-wise, it was a broad-based rally. Nifty IT saw 6.7%, driven by hopes of strong export momentum. Realty too climbed 5.9% amid expectations of lower interest rates and rising consumer sentiment. Experts believe this could be the beginning of a medium-term uptrend, but warn that earnings, inflation, and global cues will decide sustainability. Lastly, we have Tata Steel, which delivered a stellar Q4 performance with net profit soaring 113% YOY to 1,301 crores, beating analyst expectations. While consolidated revenue declined 4.2% to 56,218 crores, effective cost management helped offset the dip. Material costs, including coking oil and iron ore, fell approximately 18.5%, driving EBITDA margins higher. The company announced a 3.6 rupees per share dividend, rewarding shareholders after a tough FY24. Indian operations remained the backbone of Tata Steel's earnings, contributing 34,661 crores in revenue and maintaining a 25% EBITDA margin. In Europe, Netherlands specifically, operations returned to profitability with a 124 crore EBITDA. But the UK continued to drag with a wider loss of 873 crores due to structural inefficiency. For the full year, Tata Steel turned around from a 4,437, that is 4,437 crore loss in FY24, to a 3,420 crore profit in FY21, a clear sign of operational revival. CEO TV Narendra called FY25 a turning point, citing the commissioning of India's largest blast furnace in Kalinganagar and increased investments in high margin segments like automotive grade steel and shipbuilding. Well, that's a wrap on today's market update. From global trade diplomacy to farmer price battles, from a stock market high to Tata Steel's rebound. Today's session captured crucial turning points in geopolitics, industry, and corporate strategy. Well, stay tuned for more updates as we continue to track the stories that move the markets and shape your portfolio.